To understand how the world became trapped in a web of debt, we have to go back, way back, to where it all began. Long before paper money, before banks, before Wall Street, there were ledgers, records of promises. In ancient Mesopotamia, around 3000 BC, people didn't trade coins. They traded IOUs, written debts, recorded on clay tablets. Farmers borrowed grain from temples. Merchants borrowed silver from priests. Everything functioned on trust and obligation. Debt was the original money. And when debts grew too large, kings often declared debt jubilees, wiping the slate clean to prevent social collapse. But over time, those temporary measures faded. Debt became permanent, and power shifted from rulers who could erase it to creditors who could enforce it. Fast forward to medieval Europe. Gold and silver ruled trade, but merchants needed something faster, a way to move wealth without physically moving metal. The Medici family in Florence pioneered something revolutionary: double-entry bookkeeping. The system that defines modern finance. Every loan had two sides, an asset and a liability. One man's debt became another's wealth. And from that simple balance sheet innovation, a new truth emerged. Money itself could be created out of debt. You didn't need gold, you just needed trust, or the illusion of it. Banks realized they could lend more money than they actually held in reserves. The world's wealth began expanding, but so did its debt. The question no one asked then, and few ask now, was this: if money is created as debt, then to keep the system alive, must debt always grow? For centuries, currencies were backed by something tangible, gold or silver. But as nations industrialized and war costs skyrocketed, the link between money and metal began to strain. Then came 1971. US President Richard Nixon announced that the dollar would no longer be backed by gold. Overnight, the world entered a new era, the fiat money system, where money's value depended only on government decree and public faith. Money became limitless. And so did debt. Central banks could now create money simply by adding numbers to a computer screen. And every dollar created this way came into existence as someone's debt, a bond, a loan, a mortgage. The entire global economy became a pyramid of promises, held up by trust alone. So, back to our question: if the world owes trillions, who exactly is the creditor? You might think it's countries like China or financial giants like BlackRock, and yes, they hold large amounts of debt, US Treasury bonds, corporate loans, derivatives. But that's just one layer of the story. When you look deeper, you find that much of global debt is owed to the financial system itself. Banks, pension funds, insurance companies, investment firms, they hold each other's debts in an endless circle. It's a closed loop, a hall of mirrors, where the world owes itself money it doesn't really have. The true creditor isn't a person or a nation, it's a system, an ecosystem that feeds on interest payments and demands perpetual growth. And at the center of that system stand the central bank's institutions that can create money from nothing and lend it at interest. In a sense, we all owe our debts to time itself, to an ever-expanding future that must always produce more than the present to pay for the past. Every system that depends on endless growth eventually hits a wall. In 2008, that wall came crashing down. Banks had created trillions in debt based on risky mortgages. When homeowners couldn't pay, the illusion shattered. Within months, global markets froze. Lehman Brothers collapsed. Millions lost their jobs and homes. The financial system nearly imploded. But instead of letting the system reset, governments and central banks doubled down. They printed more money, issued more debt, and slashed interest rates to near zero. Debt didn't disappear, it was transferred. From individuals to governments, from local banks to central banks. The patient survived, but became addicted to the medicine. Global debt exploded from $120 trillion in 2008 to over $300 trillion by 2025. Today, the numbers are staggering. Governments owe around $100 trillion. Corporations owe $150 trillion. Households owe $50 trillion. That's roughly 3 times the entire world's GDP. In simple terms, if every human worked, produced, and saved for decades, we still couldn't pay it all off. So the world keeps borrowing, because it has to. The modern economy isn't just built on debt, it requires it. Without borrowing, there's no money creation. Without debt expansion, growth stalls. Debt is no longer a side effect of the system. It is the system. Which leads us back to our haunting question. If everyone owes someone, and all that money is created as debt, who, exactly, sits at the top of this pyramid? Behind every central bank stands an institution few people know about, the Bank for International Settlements, or BICE, based in Basel, Switzerland. It's often called the central bank of central banks. When poorer nations can't pay their debts, they're told to cut public spending, sell state assets, and open markets to foreign investors. Debt becomes a tool of control, and this pattern from colonial empires to modern finance reveals a hard truth. The world may not have a single creditor, but it does have an architecture of power that ensures money always flows upward. Now, as we enter the digital age, the nature of debt is evolving again. On one hand, this could streamline payments and reduce corruption. On the other, it could centralize control like never before, allowing authorities to freeze accounts, set expiration dates on money, or even penalize saving. Debt and data may soon merge into one system, where your digital identity is tied to your financial behavior. And while cryptocurrencies like Bitcoin promise decentralization, they also expose how fragile our current debt-based system truly is. Because in a world where money can be created endlessly, the real scarcity isn't currency, it's trust. As of 2025, the global economy is facing familiar warning signs. Interest payments on US debt now exceed $1 trillion per year. Over 70% of nations spend more on debt servicing than on education or healthcare. We've seen this movie before, in 1929, 2008, and now again. The same cause, the same effect. When debt expands faster than real productivity, the system buckles. Each time, the fix has been the same. Print more money, lower interest rates, kick the can down the road. But there's a limit to how far that road goes, and the next time it ends, the system might not reboot. So, what do we learn from all this? Takeaway 1. Debt isn't just a financial tool, it's the foundation of modern money. The system requires debt to exist. Every dollar in your wallet represents someone else's liability. Takeaway 2. The creditor isn't one person or nation, it's a self-sustaining network of institutions, banks, funds, and central authorities that profit from interest and dependency. Takeaway 3. When debt becomes unpayable, history shows two outcomes: forgiveness or collapse. The ancient world had two. Modern economies rely on bailouts, but eventually, every system resets. Unlimited money creation, record debt, artificially low interest rates. For decades, we've postponed the reckoning, believing that growth and innovation will outpace the debt. But numbers don't lie. The system is mathematically unsustainable, and when it breaks, it won't just be a market crash. It will be a trust crash. The collapse of faith in money itself. Maybe that's why nations are quietly stockpiling gold, exploring blockchain, or seeking new reserve currencies. They sense the end of an era, the age of infinite debt. So, who is the creditor of the world? It's the system we all agreed to, one built on confidence, promises, and the endless ticking of the debt clock. The real creditor is the future itself, because every loan, every bond, every government budget assumes that tomorrow will pay for today. But what happens when the future can't keep up? Pause. Maybe that's the question of our time, because if debt is the glue holding the world together, what happens when that glue dissolves? If this video opened your eyes to how the world's money really works, don't forget to like, share, and subscribe. Every episode, we explore the hidden forces shaping global economics and history, because the only way to understand the future is to question the system we're living in today.